do if you want to play the North American oil and gas boom, but you don't feel like chasing the many high-quality independent exploration and production companies that are within spitting distance of their all-time highs. You know, EOG, Continental Resources, ones we talk about. For those of you who are comfortable with taking a bigger risk, you might want to think about Magnum Hunter Resources, MHR, a small speculative $1.37 billion exploration production company with a $7.74 stock that has high-quality assets, Marcellus, Utica, Bakken, which we talk about all the time on the show. Right now, Magnum Hunter is ramping up production like crazy. In the latest quarter, this is just reported 3 weeks ago, the company posted a 110% increase in production year over year, 47% of the mix being liquids. Management's forecasting full-year production growth of 146%. Company has a terrific track record of growing its reserves. However, while Magnum's production growth may be beautiful, its balance sheet is far from pretty. But it's getting better, because just last Wednesday, the company raised $150 million in a private placement, selling 1.4 million shares to relational investors at $7 per share. Thanks to that private placement, Magnum Hunter should have enough financial breathing room to keep spending for the next 12 months, although there may be another funding gap that needs to be closed next year. Stock has pulled back more than 15% from its April highs when we last spoke to the CEO. On the other hand, Magnum Hunter is still more than double from 12 months ago. So can it resume its long-term rally? Let's check in with Gary Evans, Chairman and CEO of Magnum Hunter. Hear more about his company, how it's doing, and where it's headed. Mr. Evans, welcome back to Mad Money. Good to see you.
Good seeing you.
Thank you. Thank you for coming. Now, Relational, we know them as really smart investors. We saw what they did with Timken, making a lot of money for people. How did you guys come together?
They actually quietly acquired 4.9% of our stock.
They did.
Really in the month of April, and then called and said, we'd like to meet. We know that you need to raise some equity. We had some very close meetings and discussions and cut a deal. Our 60-day lockup expired May 26th, and they funded $150 million.
So I mean, they like Marcellus, they like Utica.
They love our land in Marcellus and Utica. They've done a lot of homework. They're very educated people.
That's what we understand.
They did a lot of homework. They knew all of our wells. They knew what was going on around us, and said that they felt like our acreage was primo and they wanted to own. So they own today 15% of our company.
Now, you've also been doing some things about selling off some non-core. You do have good Bakken assets, but they seem like they could turn out to be non-core.
We've sold everything in Canada.
Right.
We've sold this year. Last year we sold $500 million of non-core assets. This year we've already sold 100. I have another 100 on the plate to sell in the month of June that we'll be announcing, and then I have another 100 after that. So we should be about 300 of non-core sales this year. We are beginning to sell fringes around North Dakota, keeping our core piece, which is about 3,000 to 4,000 barrels a day.
Okay, well, how do you make that judgment? Because people will say, wait a second, we've had every single company we had Bakken. Bakken's been great. It's
been great, but 35% IRRs versus 80 to 90. Okay. Where do I spend my money?
All right.
A big change has been gas prices, as you all know.
Right.
Gas has gone from $3 to $4.50, and we have the infrastructure in our Marcellus Utica with the Eureka Hunter pipeline where we can move that gas out of the basin. So we're in control of our destiny there.
Right, and there's a lot of gas and oil that is not easily moved in other places, which you need infrastructure, or else it costs too much.
We don't have to wait. When we drill a well, frack a well, it flows right into our pipeline.
Okay, now some of the research basically says that you're the southernmost driller, and that's the riskiest area. But we also know from speaking with companies like Core Labs that risky doesn't mean the same thing as it used to be, right?
That's right. That's a very good point. There was an announcement this morning, I don't know if you saw, from Rice Energy.
Yes.
40-some-odd million a day well, which is the biggest Utica well in the entire play. We announced our Stalder well, which is in Monroe County, Ohio, at $32.5 million late last year. We're now TD today, a well called the Stewart Windland in Tyler County, West Virginia, which is only the second well in West Virginia to drill in the Utica. Chevron drilled the first one up in Marshall County. We think this well is on the equivalent of a Rice well. We'll be fracking that well over the next 30 to 45 days.
Now, what are you doing with the condensate? Where does that go?
This dry Utica is 98% methane, no condensate.
Okay.
Now, the Marcellus wells in the area are very rich, 1,400 BTU. That all goes to a MarkWest plant called Mobley.
Oh, it goes to MWA?
Yes.
Okay, so that could be shipped up to, they've got a lot of stuff going to the Northeast. They have a very robust pipeline system.
Yeah, we have a 200 million a day plant called Mobley that's dedicated to us.
Now, some people say you've got maybe it's right to do a master limited partnership. But if that's the case, wouldn't it just cost you more to ship your oil and gas?
No, we really need to recognize the value of our midstream assets, because an upstream company funding money for midstream really doesn't make economic sense, because a midstream has a much lower cost of funds if it gets in the MLP relationship.
Right, so then that's possible, because you want to
plan for next year.
It is, so because if you unlock that,
it's about $600 to $700 million of value to us.
Jeez, I just think that would be fabulous, and it could be
half our market cap today.
And it could be a good deal.
Could be a great deal. Wow. And there's plenty of demand for MLPs, as you well know.
Right, especially pure ones, where that one is. That's what we want them.
High growth. I mean, there's not a better growth story in the United States for gas than the Marcellus and Utica. And we have it stacked. We have Marcellus right above our Utica, right along the Ohio River. Right. No other company has that.
Now, Gary, the people worried about funding gap, it sounds like from listening to you that it's something that you do have much more control of your destiny than some of the research might think, because of a possible MLP, because of all these things that go down.
It's a very manageable. Now, we've raised $180 million of equity this year. We have a new borrowing base review coming up with our reserve report at end of June. I'm selling non-core assets. So we're okay. We're fine for the year. Now, next year, we'll determine with the success that we have with all these new wells. Today, we're producing 18,000 and 19,000 barrels a day. We're turning 8 new Marcellus wells on just this week. That'll put us over 20,000 barrels a day. And by the end of the year, we're projected to be at 32,000 barrels a day. That's in 6 months.
That'd be very meaningful.
Huge.
Well, now I know why Relational took that stake, and they are very, very smart buyers. That's Gary Evans, Chairman and CEO of Magnum Hunter Resources. I like to have a speculative name in a portfolio. Consider Magnum Hunter. Mad Money's back into the break.